Welcome to Trading Lounge and the Australian Report, and this is the XXJ here. This is the Australian banking sector, and as you know, we've been following this from wave 1 here, and an A and a B and a C here for wave 2, almost an expanded flat, and then looking for wave 3 to the upside. And our target in this area was the 7.5 at this case. We're looking for wave 4 here as the 38.2% retracement level here, and of course the banks have a lot of influence over the ASX 200. So in a nutshell, we could still even move down to this level here, down here further, with a larger wave 4 correction here. But one of the things here is that normally wave 2 here is a simple correction, normally an ABC correction, a zigzag correction, and this one here is that, but it's a rather complicated, time-consuming correction in compared to its wave 1 here in terms of time and complexity and so on here. So we could argue the basis that this is a complex correction. That means that the wave 4 here will be a simple correction. Okay. The other thing in here as well, if this correction is actually finished, putting that little guy, just number 4 just there, if that is actually finished there, then obviously we'll see the move to the upside. Also too, in here on the daily bar here, this one, and this one, this would be a switch trade setup here. So we could look to go long above this little high here on the last daily chart here, because as a switch setup, the market has created that that move up to this bar, and then this one here has moved down below this one here. So it's really checking the support in here, inside the market depth, so to speak. So we can reverse have a long order sitting above here. As such, if this doesn't get triggered, well then the trade doesn't go long, and this will come down a little bit further, and then we'll end up with a more complex correction here. So in a bit of a nutshell, the Australian market from its low down here too has looking at wave 1 and 2 and 3 and 4 here as well, and wave 5 to the upside here. So let's just have a look at that. So this wave 4 here, we've got wave 1 and 2 and 3 and 4 here, and then going up for wave 5 here. Now, once this is finished here, then there's a couple of things we could actually look at here. I mean, I've got this here as 1, 2, 3, 4, and then 5 up to 6,000. There is a target just below that at group 2, and we'll talk about that in a moment. But once that 5-wave sequence is finished here, then we can look at that being the top of wave 3, and then we can look at an A wave, a B wave, and a C wave for wave 4 here, and then wave 5 up. Now, this would be in line with the US markets here as such, but what we need to be a little bit mindful of, and what we don't know, is that this 5-wave structure to the upside here could just have an A wave and a B wave and a C wave back here. There's a little gap here, so let's just use that here as a 61.8% retracement level, and then move up there, and then we would need to move this to a larger degree here. We would have to move wave 1 to the top here, and then wave 2 over to this point here, and then wave 3 up here, and wave 4 and wave 5 up here. So that's a possibility as well. Okay, so I don't know that at this stage. So what we'll need to do is we'll need to observe this move here. In both cases, we're looking for this either A wave or this ABC here. So in a way, they're going to be both the same here. So I won't know until it pulls right back, and then we're trading wave B up here. And we'll do that, but we'll be aware of that current situation playing out there. But we'll get to that when we get to it. But our job at the moment is pretty straightforward, and we're looking for a move to the upside as such. So let's just drill in here and just start with the 4-hour chart, I guess. So yeah, so coming up here from this wave 4 here, we'll look at wave 1 and 2, nice strong 3rd wave here, In this case here, wave 2 was simple, and wave 4 is a bit more complex here. So that's fine, and yeah, we're pushing up from here. So we've got our 38.2% retracement level from wave 2, where it was down in here roughly, to the top of wave. We go to the wave 3 here. That's where the top is here for this wave 3. We don't use that one there when we're looking for the retracement level. So we put that there. So we've come pretty close in here, as I mentioned before, and then we're looking for the market to move higher through here. So I'll just clean my mess up here. We'll just move into an hourly chart here next. So 1 hour chart. So wave 3 here, we're looking at an A wave, and then an A and a B and a C for the B wave, and then down for the C wave. Now this is an expanded flat, as I mentioned before, because the B wave has taken the top of the wave 3 out, and then the C wave here has taken the low of wave A out. Normally we would look for the distance above here that it's taken out would normally be the distance below here it's taken out. So there's a few variants in there that we need to accommodate. So what we're looking for now is we're looking for a move to the upside for wave 5 here, of wave 5, of wave 3. So one way of doing that is taking the top of wave 3 here and the low of wave 4 here, and looking for the 1618 here. So that would be one of the targets. There's other ones in there. There's a 127 move, which is really important for day trading as well. Yeah, so in a nutshell, one target is saying to us, well, group 2 here from 5.9 to 6 here, we've got 1, 2, and 3, which is group 1. Then the midpoint here, where we can expect a correction, and then we can also expect a correction here. So the 72 here is a nice number to trade to. You can always get back in via that one there as well to get up to the 6,000 there. Now, this one thing, when I'm looking at this here, and this could be correct, what I'm about to say, it's possible that this is wave 1 here and wave 2 here. Okay, and we're going up for wave 3. Now that would make sense just looking at that. But we've got a situation here where we've got this as wave 1 in here and a 2 here, and the wave 3 here and the wave 4 here. And then we're looking for this wave 5 here. Now, this may seem, if I looked at this first up, I'd say wave 1 here and then wave 2 here. But when you look at some of the other markets, that obviously different markets influence each other because news is coming out in those particular places. But when we look at the DAX, for instance, here, we've had this this wave 4 here. This is just 100 ticks, so it's quite a wide, a wide correction here before it moved to the upside here. Okay, so that kind of price action was playing out in some of the markets. So, to have this wider one here, like the DAX, can play out as a wave 4 here. So, yeah, we'll leave it at that. But just to bear in mind that we may just keep this as wave 2 here. Let's just see how strong this is here. And of course, with this move as well, if I can just grab one of these here, we're sort of coming in talking about the setups now. So a trade setup, which is on the card. So just tidy this up a bit. So we would use that top there we're waiting for, and then we would move the market down into this one here now. So really we're getting a trigger here. Okay, so it's possible for this to go long here at this stage. So we need to talk about that a little bit. This is a bit of a gross setup here. We can refine this a lot further. One of the other points here too is that from the 5.9 here, we've got group 1, which is 1, 2, and 3, 10, 20, and 30 in this case, and that's a subgroup level. So in this case here, what we would normally sort of expect is a move up, just generally speaking, a move up to here, and then some type of correction here. So this may pull back here. So let's just go in and have a look at this on the tick chart, 100 ticks here. So that would be the entry coming in through here. So this would be the wave 1 here and wave 2 here, and then wave 1, 2, 3, 4, 5 for the third wave, an A wave, a B wave over here, and 5 waves for the C wave here, and then moving up from here. So in a bit of a nutshell, if we just sort of drill in here, because it really, I mean, I can see that it's moved up here and it's tested on here, but we may end up with normally look for a stronger retest sitting testing on here. So we just need to be a little bit careful here. So I'm just going to go to, I think it was the 10 tick we were working on last time as well. So on 10 ticks here, I mean, having a stop loss of 20 ticks is quite acceptable for short-term trading in this market here. Of course, you would want to halve that risk as quickly as possible, to get it down to 10 ticks. But at the same time here, you always got to be a bit careful with these markets, but indices. But if this was going to react from the old high here and so on, then the 61.8% retracement levels down at 592 here, not 20. So you'd want to keep the stop below that, and that's if you entered here, of course. So you could accommodate any sort of pullback within this space here. So I mean, we could look at this in terms of understanding this here as well, in terms of probably a wave 1 and 2 in here, and then I can see this is 1 and 2 in here, and this is probably all the third wave in here, 4th and 5th here so basically 1 and 2 and 3 and 4, and then 1, 2, 3, 4, 5 into here. May not even be finished here, but so you may end up with a situation coming down. This could go higher here, okay, a bit higher. It still could come back and test. It has tested it here, as I mentioned before, but it's not really a strong retest here. But it is a test, and it is a place to put support there. But also too with Group 1 as well is that with 1, 2, and 3 here, we know that if we get tested support on this number here, number 3, then it separates the market being pulled back to the closest largest number, whatever that may be, which is in here. And then it looks at this number here, the 50 here. So having tested support here, that that severs that pull from here. The other thing I wanted to point out here too is that if the market comes back down here, it would only belong. It's quite common for it to come back and hit the 20 here and then move off from that point. And it can spike down through the 20 as well. But it's the retest here as well. So if you were intraday trading and the market came down here, then I would simply move my stop here and I would wait for the retest here. I'd wait for the retest to come back up here, and then I would move my stop up here, because this number 2 here, if this becomes a retested resistance, then I normally find that the market's going to be pulled back down to the closest largest number. So the 3 separates it for the move to the upside, and any move back down through here you can consider it dangerous at that particular point, and you don't really want to. I wouldn't hold it past that. It kind of sways to pretty much a 70% sort of chance that the market's going to come back and be pulled into this number here. It may not, but the chances of it that it will. So over here we've got the retest here, and it's only pulled back down to this space here. So it doesn't do it always, but most of the time it actually does. So, all right, I'll just have a look at CBA as well, because we looked at Combank. So Combank was another one too that we were looking at having a wave 4 correction. This is the 38.2% retracement level target that we were looking at, and also the wave 4 of 1 lesser degree. So we've got a reasonably nice A wave here, B wave here, and C wave obviously coming down here. It does appear that the C wave could finish here, so I'm a little bit unsure about this here, but let's just see how we travel. Any further down here would be in trouble at that stage with this. But that little gap over here would also, I mean, CBA likes to fill its gaps, so I'll just leave that there. So we might see a weaker opening for this here, and any long trade on the banks at this stage would have, well, say for CBA, would need a tested support on 78 to move to the upside. Okay, so that can be very helpful for the ASX 200 as well, CBA, because obviously CBA is the larger bank within the bunch as such. So it's pretty, that it will mirror each other here. Alrighty, cheers.